The topic right now of central bank liquidity, I think, is the most important facet, the most important factor moving markets right now. I really can't see anything that has an impact close to it, and here's why. Um, it's obvious to look at headlines and think, look at things like earnings, which are always important, economic releases, which are always important, and of course, the exogenous factor of the coronavirus in China, which has a major impact. But yet somehow markets just keep chugging along, shrugging off more or less anything in their wake. Yes, there are some stocks that go down on bad news. Those tend to be earnings specific. But for the most part, the leadership remains the same, although narrowing. And the stock markets continue to charge ahead, as do the bond markets. What's possibly doing this? And that comes back to the central banks. Um, what we're looking at here is, and you'll in the article that we've linked to, you'll see some charts. The Federal Reserve drastically increased their balance sheet in the fourth quarter of 2019. The reason for that was the basically a change in the repo marketplace. It became much harder to get repos done. The cause is not necessarily clear. It's believed to be a change in the way that J.P. Morgan and some other large banks approached their reserves, and so lent out less money via the repo market. The Fed then stepped in, providing a backstop to that market, which is critical. That's how positions get financed in a leveraged economy. Um, and as a result, the Fed had a twofold effect by coming in and averting a crisis. Obviously, that's a good thing. It did have the effect, though, by raising the balance sheet, of looking an awful lot like another round of quantitative easing. We've discussed this in previous posts. However, we're seeing the Fed seem to be topping out, it appears. It's way too early to draw the trend. The data is not released frequently enough to really make what I would call high frequency decisions. But for the most part, since about Christmas time, end of the year, the Fed balance sheet seems to be kind of finding its level, moving in a general sideways pattern. And so that takes away one of the large impetuses. You're not getting all this new money flowing in, but what it's telling is you have a very accommodative Fed. We're taping this now Tuesday afternoon. Chairman Powell has been speaking. His prepared remarks did address this, and sort of he gave a glass half full answer, which is we're not looking to really expand the Fed balance sheet, but we'll do so as appropriate, meaning that effectively there's a Fed put in the repo market. Then you move over to China, and this is the part that is very clear of how central banks move things around. The coronavirus is clearly a drag on the Chinese economy, if not the world economy. It's hard to imagine taking out a large swath of the world's most populous country, taking them out economically, I should say, and not having that giving any ripple effects. It's typical for the Chinese People's Bank of China to increase reserves around the Chinese New Year because there's all sorts of disruptions. Their economy slows down dramatically, and there's tons of people in motion. Imagine millions of people going around. So it's normal for them to add liquidity. But what they did in this case was added way more liquidity than they normally would. I don't blame them for doing so. It's really the only option that a central bank has in a crisis of this sort to do anything. They're certainly, they don't hand out medicine, but they make sure that the economy, or at least money, flows smoothly throughout the economy. It's also normal, though, for the PBOC to start to withdraw some of those reserves after the holiday. And as of now, we haven't seen it. They've put a lot of money into that system for good reason, and it hasn't come out. What happens in those situations, though, is money goes where it's going to go, and it flows into strange places. And in this case, where you have some impingement upon where the money can go in terms of goods and services, particularly in China, the money's flowing elsewhere. For example, you see Bitcoin over 10,000. I got to believe that's not a coincidence. And I think what you're seeing is the Chinese stock markets respond reasonably well because, there's a lot of money to underpin them. This is why you have to keep an eye on central bank liquidity. And this is why the question that I see going forward is, what happens if the world central banks start to drain some of that liquidity? How will the markets react? Have they gotten too addicted to this liquidity that's being introduced by central banks? And will there be a hangover if some of it starts to go away?